Oh man, Bitcoin is breaking down from a critical pattern right now. Where is support? How much further can Bitcoin pull back? We are down 2.3% today here on Monday. How much further can this go? Is this just a trap before a bigger move to the upside? We're going to analyze all the key moves here that can occur here on the Bitcoin price action. Smash on the likes. Don't forget to subscribe. As always, check out the links to Binance and Bybit, links in the description. If you want to trade any cryptocurrencies, those are the exchanges I use, affiliate links in the description. Now you can see here, guys, we are getting a clean breakdown here with okay volume. Now I'm going to explain to you guys where I think support can be, but before I do that, let's notch down to the 4-hourly chart. We have been in this symmetrical triangle pattern for a little while now. The bulls and the bears have been at stalemate, waiting to decide on the next direction. The bulls have been unable to break beyond 30,000, let alone retest the 31,000, which we need for a higher high. That is the game that's going on right now. You can see here, just a day or so ago, we did have a fake out to the upside. This was not supported by volume. We got rejected by 30 again and sent straight back in to our symmetrical triangle. One of the reasons for that was that this breakout occurred over the weekend, right? Weekend is the worst time to get a breakout of a pattern because normally volume doesn't come through because institutional and high volume traders aren't present in the market. Now, of course, today is a Monday. It's a bank holiday where I'm here in the UK because of the King's coronation, but nobody cares. The rest of the world is focused here on the fact that this is breaking down because those markets are open. And you can see we've already tested the first pivot point. Remember, when you break down from a symmetrical triangle, look for the pivot points. Look to the left, like Beyonce said. Check this level here. Will we hold a support? If we don't, look at the next pivot point, which brings you down to 27,000. Those are the levels I'm looking out for right now. Now, if you do want to take the measured move from a pattern like this, you can take the length of the channel here, apply this to the point of breakout. Again, we go through all of this stuff on Ijaz.uk/TA, so hopefully this is not your first time seeing this, but if it is, that's where you're going to get caught up. And you can see here, this measured move brings you down to 25,200. Now, you guys know I've been calling for a pullback, that I'm open to a pullback between that kind of 26,000 level, because that's where our weekly EMA ribbon sits. If I jot this back up to the weekly level here on the chart, bring out the EMA ribbon, you will see very clearly that this line, which we've just drawn, this green line, brings you into your EMA ribbon. So there's a lot of confluence there. If we do need to pull back on our weekly time frame, it's not the end of the world. And in fact, I take that as an opportunity to dollar cost average and buy the dip. But coming back into the 4-hourly chart, just to focus on this breakdown here, you need to understand that sometimes, just like we had a fake out to the upside, you can get fake outs to the downside. So there's a few scenarios that can play out here. One, we can create support where we're at. If we do, you could see something like this before I move to the upside. Right? That can often happen. Other times, you may want to come down to the next pivot point, which is down here, right, at 27,000. So maybe it comes down there, all the way down to 27, and then follows the pattern up to the upside. Okay, so that's what we want to look out for, is can this be a little break to the downside, just to cool off, let the RSI reset. Remember, look, this RSI is nearly in the oversold territory here on the 4-hourly chart. So people will be looking to buy the dip in this region when we cross below the green level. So maybe we get a little bit more of a pullback and then boom, off we can go start climbing to the upside. Another thing which is giving me confidence around this is looking at the daily chart EMA ribbon. What do you notice here on the daily chart on the EMA ribbon? If I clear off some of those lines, look at this. We have gone deep now into this EMA ribbon. This previous higher low has now been taken out. Now the bears are trying to get lower than this low, right? They want to get below 27,000. But we're trying to hold on to our EMA ribbon. If the bears manage a close below the daily EMA ribbon, we're currently just above the EMA ribbon here. But look at where the wick went. It went below the EMA ribbon. If that goes below the EMA ribbon and closes, the body candle closes, we would have lost our daily EMA ribbon. And this will not be good because statistically, when you lose your daily EMA ribbon, you're normally set for a bigger move. Now, we haven't been below our daily EMA ribbon since the time where we then followed this down all the way down to 19,500. So this wouldn't be great to lose the daily EMA ribbon. Again, I explained to you it's not the end of the world because on the weekly time frame we still hold our EMA ribbon, but it does mean that on a longer time frame we could be looking for a multi-week pullback versus just a pullback which is going to last a couple of days. So the rest of the candle close here over the next 9 hours is going to be critical. Will we hold our EMA ribbon or will we lose that EMA ribbon? If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on Skillshare. For those who aren't familiar, Skillshare is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days. If you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. The other thing worth looking at is the Bollinger Band. Now what you can see on the Bollinger Band is we've moved to the downside. We're coming to test the bottom of the Bollinger Band, and the bottom of the Bollinger Band sits at, again, 27,100. We're getting a lot of confluence here. Remember, confluence is where different indicators, different price patterns, different candlesticks are telling you the same story, right? And we're seeing that same story unfold here. So that's something else you look out for here as well. You can also notice here on the shorter time frames, if we look at it, let's say on the 4 hourly, what do you notice? You notice it's a double top pattern, right? You do have an M pattern playing out here. So these M patterns are bearish patterns, normally looking to extend your move to the downside. Again, matches up with the fact that we're breaking down from this symmetrical triangle. We could be looking for a deeper pullback into 27,100 territory. Okay, but again, once we do flush that out, once we do flush some of those longs out, can we then come down, hold 27,100, and then work on a move? That is what we're going to be looking for. Of course, the bears will not want to stop there. They're then going to want to work their way down to the next support levels, which if I show you on this chart, you can see they're trying to break this level, then they want to break 26, and then they want to get to 25. That's the game plan for the bears. But for the bulls, they're going to want to either rotate now. Okay, this is their game plan. Either try to rotate here from this support line. If it can't, they have to rotate from this support line. If they can't, they have to rotate from this support line at 26. And if they can't, then you got 25, right? Those are the lines of army that the bulls have. They need to hold support at some of these levels. And the final case here is 25,000. 25,000 takes you into your weekly EMA ribbon, which has to be that final level which holds for Bitcoin. Let's also take a look at what else is going on in the charts. We want to take a look at the dollar index. Remember, the dollar index is what gives us a clue about risk rotating on or off. And you can see here, dollar index is having a slightly green day today. But overall, again, I wouldn't be too concerned about the dollar index, because if you look at the daily chart, they're firmly being rejected by its EMA ribbon. You can see here that the dollar index is firmly in a downward trend, and that is showing that risk is slowly starting to rotate back on again. Remember, Bitcoin inversely correlated to the dollar index. We need this to continue its downward trend. If you look at the weekly chart, it's well extended below its weekly EMA ribbon. So again, if dollar index wants to go for a couple of positive weeks up towards its EMA ribbon, just to test before getting rejected, Bitcoin would do the opposite, right? Bitcoin will fall down into its EMA ribbon, into 26,000, into 25,000, and then hope to gain support where the dollar index is being rejected. So there you have it, guys. Crazy day in the markets. A big red day here for Bitcoin. Should we be panicking? Should we be worried? I'm personally not worried at all. This symmetrical triangle, yes, is breaking down. Will we see support on the first pivot point? Will we see support on the second pivot point? Even if we lose both of those and want to retrace down into 26,000, 25,000 even, I will be DCing and adding to my positions, because that's going to hold a support on the weekly EMA ribbon. Let me know what are you guys doing in the market. Don't forget to smash up the likes. Don't forget to subscribe. Check out this video here, and I'll see you in the next one.